The Penang Development Corp has decided to terminate its controversial collaboration agreement with Umech Land for the development of Batu Kawan Industrial Park 2. In a statement on Penang Chief Minister Chow Kon Yeow's Facebook page, the Board of Directors of PDC said the change in majority shareholders of Umech Land's equity structure was done without informing PDC and without PDC's approval, is a serious issue and cannot be accepted by PDC's board. However, the board of PDC maintained that the selection process of Umech Land was transparent and in line with PDC policy. The termination of the agreement comes with a 3 months notice, and upon the contract's termination, PDC is instructed to advertise for a request for proposal to collaborate with PDC to develop BKIP2 according to the statement. The deal for the development of the mega industrial project with an estimated GDV of at least 3.5 billion over 8 years came under scrutiny after Sunway on September 27th announced that its 70% owned unit, Umech Land, had inked a joint development agreement with PDC to co-develop the 558.96 acre parcel in Bairam Seberang Perai, Selatan, near Batu Kawan. It is important to note that Sunway had only emerged as a majority shareholder in Umech Land 2 days prior to the announcement of the agreement by injecting 23.33 million into the company, diluting the shareholding of the original stakeholders Karen Cheng Pui Kwan to 21% and Nathaniel Rajakumar to 9%. Before Sunway's cash injection, Umech Land was 70-30 owned by Cheng and Nathaniel. A report by The Edge had previously quoted Chow as saying that he was not aware Sunway was involved until it announced the deal to Bursa Malaysia. Meanwhile, Sunway said that Umech Land has not received a formal letter of termination of the agreement from PDC. In a boss filing, Sunway said that it would be in a better position to make the appropriate statement regarding the termination after receiving and reviewing the letter from PDC. MyEG Services has received a letter of acceptance from the Ministry of Home Affairs granting an extension for their immigration-related services for a period of 2 years. According to its boss filing, the exact value of this extension will be dependent on the number of transactions performed over this period. However, MyEG will need to complete a system enhancement before being allowed to resume accepting applications for the services. MyEG said that an agreement to formalize the extension will be signed at a later date. The group added that it will announce the commencement date of the system enhancement in due course. MyEG says the extension is expected to contribute positively to its earnings and net assets per share for FY 2023. Last month, MyEG said it was still finalizing the terms of an immigration-related services concession with Putrajaya after announcing that it had stopped accepting applications for customers on its portal. The group's 3-year concession for immigration-related services was scheduled to end on May 22nd, following an extension from May 2020. In July, MyEG said that it had received a notification letter dated July 4th from Moha to confirm that the Ministry of Finance had agreed to an extension of the concession. Shanghai-listed LONGi Green Energy Technology is setting up a solar photovoltaic manufacturing facility in Selangor with a total of 1.8 billion ringgit capital investment as part of its Malaysian expansion plan. This marks the first PV manufacturing base in Peninsular Malaysia. The world's largest manufacturer of solar monocrystalline silicone wafers, cells and modules has a manufacturing base in Samajaya Free Industrial Zone, Sarawak, its first facility outside of China, which it established back in 2016. The new facility in Serendah, LONGi said, is to be developed on a 140-acre piece of land. Currently, the construction of Phase 1 is completed, with the construction of Phase 2 targeted to be completed by March 2024. Upon completion of both phases, the module plant is slated to have a combined production capacity of 8.8 gigawatt per annum, its International Centre Vice President Yang Si-jing told the press after the groundbreaking ceremony. In Sarawak, LONGi's solar manufacturing base has developed immensely with 2 other ingot plants, 1 ingot shaping plant, 2 wafer plants, 3 cell plants, and 1 module plant to be developed within 7 years. DHL Supply Chain, the contract logistics arm of German MNC Deutsche Post, will invest up to 350 million euros in Southeast Asia, of which Malaysia will receive the biggest investment of up to 131 million euros. Meanwhile, DHL Supply Chain will allocate 104 million euros worth of investment in Singapore, followed by the Philippines with up to 80 million euros and Indonesia with 35 million euros. DHL Supply Chain Southeast Asia CEO Andres Retief said that the investment will be spread over the next 5 years to expand DHL Supply Chain's warehousing capacity, workforce and sustainability initiatives in Southeast Asia. Retief explains that there is a global reshuffle of supply chains and Malaysia will benefit from it, especially in manufacturing. As a member of ASEAN, he says the country is party to numerous free trade agreements, making it an attractive option for those looking to diversify their sourcing options. With the investment, Retief said that DHL Supply Chain will introduce new facilities across Malaysia, with 2 in Penang, 1 in Kuala Lumpur and another in Johor Bahru, which covers the main economic regions of the country. These new builds will add 113,000 square meters of warehouse space to DHL Supply Chain's existing Malaysian portfolio of 217,300 square meters. Part of the total investment will also be directed to the implementation of advanced automation at the upcoming Penang Logistics Hub 5, which is scheduled to be completed in 2024. DHL Supply Chain CEO of Asia Pacific, Javier Bilbao, said the decision to invest the largest amount in Malaysia stems from a surge in foreign investments in the country recently, as well as its vital role in the semiconductor industry. DHL Supply Chain expects that the new investments will create 450 jobs in the country by 2024, mainly centered on digitalization and automation of its warehouses. New Ace market entrant Minox International Group saw a 26% bump over its 25-cent initial public offering price at the opening bell, trading at 31.5 cents. It eventually ended Tuesday at 37 cents, 48% higher than its listing price. It was also the most actively traded stock on Bursa Malaysia today, with over 265 million shares transacted. Minox is principally involved in the distribution of stainless steel sanitary valves, tubes and fittings, installation components and equipment, rubber hoses under the Minox brand and other related products. Meanwhile, Minox said that it will pass on the increased cost to its customers following the government's announcement that it would raise the service tax from 6 to 8%. However, Managing Director Cheong Chi Son said that currently Minox have no plans to increase costs. Among its notable industrial end customers are Malaysia Milk, Unilever Foods Malaysia, Johnson & Johnson Malaysia, Thai Beverage Public Co. and Dinding's Poultry Processing, among others. Minox, having raised 22.5 million from its IPO, will introduce new vacuum fittings and valves tailored for semiconductor production lines. Jong says this is expected to drive earnings into double digits.